Hi, everyone. Welcome to Crowd Forecast News, episode number 184 for June 11th, 2018. Today, we will be discussing the 246th weekly report, which you should be seeing on your screen right now while I'm talking. Also, you can go to TimingResearch.com and you can download the full report there, or I'm also posting the full text of the report in blog format, so you can read it directly on the webpage. Now, my name is David Kosmeter. I'm the creator of TimingResearch.com, and I have Michael Filighera back to moderate today. So I'm going to go ahead and turn it over to him.
Thank you, David, and thank you for asking me to moderate again today. And I want to also share and introduce our panel for today. We have Gallina from cjanetrade.com, and we have Jim Kenney from the optionsprofessor.com. Jim and I have done a lot of shows together, so I think you'll really be excited with him. And Jane and I have been talking, and I know that her addition is going to be very valuable. And so let's jump right in and get started with today. The first question that we have, of course, as always each week, is which direction do you think the S&P 500 index will move from this coming Monday's open to Friday's close? And why don't we do we'll start with Jim and then Jane and then myself.
Okay, right now we got the market on the rise here. It does look like it's got some legs, and with regards to all the stuff that's happening this week, the fact that nobody seems to be selling into this at all looks pretty strong. So I would say that looks like it would be higher going into the end of the week, and I would put it probably just a shade over 50-50 at that level.
Okay, great, thank you. And Jane?
I actually think I'm going to disagree. I think that we're going to see an upward movement today and potentially into tomorrow into the FOMC meeting. And then I think we're going to see a pullback. So I think we're going to end up a little bit lower than we had, than we are right now. I wouldn't say necessarily, below the 278 level. Excuse me, I'm looking at the SPY. But I think we are going to end up lower than we are right now.
Okay.
And I'd say about 60% sure on that.
Wow, great. I am actually excited with the bulls this week, and even though it might be against my nature, and I'm going to say that higher, and we'll get in a little bit later on why we feel higher or lower, but I'm going to give it about also a 60% chance of being higher. And I'm going to stop there, and I need to back up because I'm familiar with you guys, and Jane and I were just talking, but I forgot to give the opportunity for each of you to introduce yourselves to the listeners. So I'm going to go take a step back, and then we'll move on to our next question. And let's start again with Jim. Maybe just introduce yourself, give us a little bit about who you are.
Yeah, I provide the content over at optionprofessor.com for their 7 DVDs. Basically, they're educational DVDs going over the basics, intermediate, and advanced strategies of options from the different objectives, such as cash flow creating strategies and strategies such as hedging, to try to offset risk on another side of a transaction you might be doing, using them as a hedge. And then, of course, limited risk speculation and how to trade them from the standpoint of rolling them up, rolling them down, and things like that. So lots to learn with the options, and I put that together for the Option Professor.
And thank you very much. And Jane?
Yeah, so I started off day trading. I'd had my Series 7 back in 2000 and saw devastation with WorldCom. And then I came back to it after having my first daughter, came back to trading actively, but as a day trader because I wanted to work from home and be present for my now 2 girls. And as a result, I started sharing everything on Twitter and then started cjanetrade.com, which then blossomed into my book, FMJ, Trust, Transition, and Trade, and now into upcoming seminar June 23rd in Orlando of the Modern Trader Summit, and really trying to empower and encourage people to step into the trading world and take control of their financial future.
Wow, very good. And again, I'm Michael Filighera. I'm with logicalsignals.com. And I've been an options market maker here in San Francisco but I've also traded on the London options market. I've traded in Amsterdam on the options market, and I traded electronically on the German Bourse DTB. Since I've returned to the United States, I've kind of gone back and decided that I really would move over to futures. So I concentrate and focus on trading futures and day trading futures. So we have a very nice mix today. We've got options and futures. And so I think that we can really put out some interesting information for folks today. Question number 2, we actually did go over because it's to what percentage do you give, or confidence, level of confidence. And question number 3, we can get into a little bit more detail. That for your answer to question 1, please share what specific reason or reasons you think the S&P 500 will be heading in the direction you chose. And again, we'll start with Jim.
Well, obviously the main reason, and again, you know, it was just a guess because obviously we don't know exactly how things are going to pan out, but there's momentum here. Obviously you're making new highs, and there are people who are starting to plow in. And so, you know, stepping right in front of that doesn't seem to be genius right now. There's no evidence of it turning over. And so, you know, I'm certainly not going to be the one-eyed man in the valley of the blind here and just jump in front of it. So the strategy that I would be looking at here, because of all the news coming in, would be that we could see a binary event with all the news coming in between the Fed and the meeting and all that, which means we could either break out significantly to the upside, or it could be buy the rumor, sell the fact. So if you feel like you're in a binary situation this week, you might want to investigate, because the VIX is at 12, a straddle or a strangle type strategy, because the VIX is indicating that premiums are rather low, and volatility could be very significant, because if we blow through 2,800, you know, the stampede could certainly happen. And there's factors such as the Fed meeting, the ECB, the Singapore situation, and also Time Warner and AT&T. You know, if some of these things start going, you know, some people think this merger lawsuit that's going on is going to be favorable for AT&T and Time Warner. If that in fact occurs, it could open up a significant amount of activity in mergers and acquisitions, and that tends to be kind of a bullish thing for the markets. And so because of we're at this point 2,800, and because of the news that could be hitting, whether it be buy the rumor, sell the fact, because people have already bid it up, or whether it becomes the breakout, a two-sided trade like a straddle or a strangle might be worth investigating at this point. And that would be my view, more than picking a side.
Right. I do agree with you. You said the two positions that I think would be fitting in the scenario that you've described, and that is strangles and straddles. So nice that you mentioned those. Jane.
Yes, let me go ahead. I'm gonna share my screen here, okay. And so here I've got the S&P ETF SPY on a daily chart, and I know it looks a little messy to you guys probably, but I've got what I think are resistance lines here, and I've got a nice trend line here, upward trend line of the upward ascending triangle, and then the bottom area right here, and then this is on our daily, the current upward movement on the daily. So I think that we will go ahead and go ahead and test this, like I was telling you earlier, Michael, the 280.41 level, which was the high back here. And I think that honestly that on the FOMC meeting coming up this week, that they are going to raise the rates based on the employment numbers to go ahead and try to slow everything down. And I think people are going to sell a little bit. Now, on the flip side, if we do break this, I think that you will see a surge of people come in. But I think that's going to be our real resistance level that will be tested. And that's why I think it could come back down here to test this initial first upward trend line.
May I ask a question on that? Because you do trade spiders, right? On options. And with volatility being so low right now, where are you seeing volume put in call wise? What strike?
Well, I haven't been trading it recently this week,
Okay.
but before I was down here in the 275 area was a big level that I saw a lot, 275.
So yes, and the reason I say that is because, as we know, options expiration and futures and everything kind of coming together, that the markets tend to gravitate towards that larger open interest levels. And 275 would definitely fit your view that what you're putting through this, today, saying that, that you're expecting it to be lower. And that would certainly put it lower. Not significantly lower, but dropping it down to 275 fits the bill. Now, for me, I rated it higher and gave it a 60% confidence rating, pretty much based on that it's going to be expiration. And so what I tend to do is I go through the larger players, the stocks that really are out there that are large retail and are just really have been in play for a while, and I check open interest levels and at which strike they're at. Now, of course, I've also seen where you could say, for example, in Apple, that the 185, 190, and 195 strikes likely have pretty large open interest on both sides. So where are they going to pull it to, or where are they going to push it to? But I've also seen pretty much on Thursday and then again into Friday where they just start blowing through strikes, which just adds to that momentum in the direction that it happens to be going. But again, I think that we are going to go higher, and I think it's basically because of patterns that I see in the market. I think they still need to fulfill some upside patterns, and also just on that it's options expiration. And on this particular cycle, the market tends to move higher into the expiration itself. Now, it may just decide once the close on Friday occurs, all hell might break loose on the sell side, in which case we'd all be sitting there going like, what's going on now?
Yeah, one thing I was going to add is that, and that's what makes me more interested in a two-sided trade here, is that the idea of rolling over to the downside is very real as well, because there are significant gaps on the NASDAQ down around 7450, and on the S&P at 2700 area, 2715, and some of these stocks, have also gapped up, particularly in some of the retailers like Williams Sonoma and Tiffany's. And so, the retail and the high-end retail has really gone nutty here as far as the buying is concerned. And so if anything did quell the enthusiasm a little bit and it did roll over, it could get bouncy either way. So that's why I was thinking with the low VIX, pricing out some of the straddles and strangles would not be the worst idea to do, and see if they make any sense.
There I am. Yes, so did mine just now.
Yeah, sorry guys, I dropped off with the internet cut out.
Your internet cut out and mine freezes all at the same time. God bless AT&T. It must have something to do with that merger. Anyway, just kind of to pull more into the current conversation about where we should go or what we look at. Are there any particular trades that you guys see or that you think would be worthy or worthwhile going into what we're doing, and how would you play that leading into Friday? And it would also be based on what you're saying in terms of higher or lower for the week. So either Jim or Jana, whoever wishes to go.
Well, I mean, like I say, the most interesting thing to me seems to be the VIX being that low. We're at a 2,800 neighborhood, which we've been up to. Now it'd be the third time here to see if it might be able to break through. And so if it doesn't break through and it rolls over, those gaps underneath and some of the stuff that Jane's talking about could very well come into play. And it has been bid up quite a bit here. If you look at some of the retail stocks and some of the, Boeing's back up to the highs and all that. And, the car companies like GM are way up there. And, just like we saw in the oil, sometimes they do take a break. And if the news sobers up here a little bit, there is some real estate underneath that it could come down and fill. But with the momentum we're seeing, I would certainly want to be cognizant that it could break out to the upside as well. So that's why the two-sided trade makes some sense. As far as the value situation is concerned, again, this is all my opinion. I've been looking at some of the metal areas because if the dollar has hit a short-term peak on the dollar index at about 95, and if the euro has hit a bottom at 115, both of these things I am putting a little bit of weight on. Then maybe some things like Freeport-McMoRan or Goldcorp might have some value down here because their 50-day and 200-day averages have crossed. And if the dollar were to, break a little bit here, that could be somewhat of a positive. And the real estate between the current prices and the moving averages is not all that far. So you can keep it on a bit of a short leash. And maybe there is some value there. So I would keep an eye on that because it's certainly not on the radar since all the retail stocks and the tech stocks and the industrials are all in the news. This is kind of a quiet area that, maybe on a longer term basis might be giving some value down here. So that's just what I was seeing out there.
Okay. Jane?
We'd mentioned before about oil, and I'm still watching oil because I think a lot of the trade talks are really affecting the price of oil, as Trump is opening his mouth. As someone originally from Washington, D.C., and all the politics and everything like that, I see that, the more that he is sort of fueling the fire of trade talks and pushing them, that I'm seeing the reflection in the price of oil as well. And so definitely keeping that on watch and, watching gush and drip.
Right. Okay.
And it seems like the trade talks are definitely not helping the grain market because we've seen some pretty good down moves in soybeans in the last couple of weeks. And I think some of these farmers would just as soon we cool it with the tariffs.
Yeah. Well, being in Canada now, too, with Trudeau opening his mouth, 270% on dairy for Canadians now.
There's an interesting thing on that, though, is that the amount of business for dairy is extremely small, but it affects a lot of seats in Quebec that with the election are important for him to retain. So on a large scale, the tariff on that is something that looks very, very big. But in the big picture of trade, it's not that huge. And the other thing is that, he has to defend it because he needs those votes out of Quebec. So I'm sure Trump knows that, and that's why he's picking at the guy on that one point,
Mm-hmm.
We shall see who wins that battle. I actually turn to the VIX when I think there's going to be a large market move. And I would side with what you're saying, Jim. I think that you kind of can go in and you can take a look at the June 20th puts that'll expire on June the 20th. And if you want a short-term play, if not, then you got to go out pretty far. You're going to have to go to the July options. And that would be July 18th, or that would be the next one that actually has a full expiration cycle in it. And I think you can play those, and you're going to get more premium in your options if you went to like the 12.5s and the put side. A lot of people just like to particularly just sell puts. If you think volatility is going to go up, then if you happen to get long at 12.5 in July, it's no big deal. But I like selling puts here. And that's probably what I would start to do in volatility. And once I started to then flip over and look at some of the calls and see where they are and how they might be advantageous in trading. One
other thing I was going to bring up, Michael, is on the Fed meeting. There are some people who are speculating that the statement may be a little bit more moderate about what they're going to do with the balance sheet reduction, meaning there's a talk that we're going to go from 4.5 trillion down to 2.5 trillion over time. And there were some things that I was hearing that they may moderate that statement on how aggressively they're going to reduce the balance sheet. And that might be viewed as quite bullish by the market.
You're right. It definitely could be. In which case, if we were to translate that into actionable, and we were looking at the 30-year, what would you think with the 30-year bond?
Well, there's a gap on the 30-year right around 3.10, and what are we at? About 2.96, 2.97. So if it went up towards that 3.10, and then they come out with some kind of a moderating statement, that could be a point where the yields could roll over from that level. And so I think that 3.10 has been kind of a resistance zone ballpark. And if we clear that, then the 3.25, 3.5, 3.75, 10-year might make some sense. If we can't clear that, then people could be looking at a pretty good buying opportunity in the Treasury market.
If we can't clear that, you're absolutely right. I agree with you on that. Let's kind of jump over to question number 4, which we can take as much time as we'd like on this. And the question is, what are your primary trading and or investing goals for the second half of 2018? And just to kind of toss it out there, the number 1 answer that came back was bullish trading and make money, to make an income, stocks and to beat the S&P, options hedging, consistency, recuperate losses of February and March, et cetera, et cetera. So with that in mind, what would you say that your primary trading or investing goals for the second half are? And we'll start again with Jim.
Well, I mean, the goals are obviously to preserve and increase capital if you can, but on a more general basis, I would view 3 areas kind of interesting. One would be in the stock market. There are those who believe that we are going to be moving higher, and we could go and take out the high sometime in the second half. So positioning for a higher stock market seems to be a reasonable thing. The Russell is already into new high territory, and the NASDAQ pretty much the same. Both of those indexes are about 10% above its 200-day average, so they're a bit overbought here, but not excessively overbought. And, again, there's a lot of things that could break the proper way to make that happen. Like I say, the AT&T Time Warner thing, if it works out well, could open the door for more merger activity. So, being exposed to stock rising for the rest of the year seems to be the way to go right now. Second thing is if this bond market can't get above 310, locking in some yields up here might be a very sharp thing for the second half of the year. Because the whole world thinks rates are going higher. And if the Fed says, wait a minute, based on what we're seeing here, we're not going to be aggressively reducing the balance sheet. So locking in some yields above 3% on the 10-year might make some sense. And then finally, I already alluded to, if this dollar has peaked on its little rally to 95, and if that euro has bottomed at 115, which I think there's a better than 50-50 chance that could be, then some of these metal stocks like the Freeports and the Gold Corp may have some value. And again, the difference between their price and the 200-day moving averages are not that far, so you don't have to stick your neck too far out there. And if the dollar were to lose some more value in the second half of the year and the euro goes from 115 towards 120 or something like that, there could be value in that as well. So those would be the 3 things that I would kind of keep an eye on here for the second half of the year. Exposure to stocks because the advance looks like it's in play. And some people are saying there could even be a melt up in the second half of the year. And then, of course, the interest rate situation. If we're not going to get a higher bond market, a higher yield bond market, then the rates above 3% could be good. So basically, those are my guesses for the second half of the year.
Thank you. And with that in mind, I'm going to just ask, is most of that would be for position traders?
Absolutely.
Okay.
But again, the shorter term traders can use some of the macro views as a general floor plan and then try to pick their spots in and out of it with their own systems.
Right. Got it. Okay, great. Jane.
Yes, I mean, I think overall we are seeing that the market overall, and with the big money buying and retirement accounts, everything like that, it is bullish overall. So I would say the trend for the year, I believe, will be bullish overall. We did have that breakdown a bit in February, and it really, I think overall it's going to end up being bullish. Of course, it is preserve capital and try to grow that capital in the long run. And just basically not letting ego get into trading, going ahead and trading according to what's presented instead of what we're speculating will happen 100%, being aware and present in the trades.
I think that's very important to be aware and present when you are trading. And I like what you said, we have to put the ego outside the front door before you actually sit down and attempt to trade, because once it gets in the way, the market doesn't care. Mm-hmm. It'll roll right over you. For me, my approach for the second half of the year is kind of in line with where I was thinking many of these traders that kind of answer these questions is to consistency, to recoup losses, to having successive growth. I think a lot of people may be very short-term traders. And in that regard, I think that we take a combination of what both Jim and Jane are saying could really be to your benefit if you're a shorter term trader. Then that would be anybody who maybe trades for the week or trades for a month, or puts a position on and waits for it to come in, or just manages that position. I, on the other hand, have taken my time and now I've converted over to being a day trader. And that throws a whole different perspective about how you want to trade, because you can set daily goals. And those daily goals can switch and change as the market does, because I'm not wrapped around to whether I think that the market goes up or down significantly within a particular time frame. My own personal opinion is that there are many, many factors out there which could dictate the happening of a binary event. And so to pick one against the other, I think is fruitless, because we're never going to get anywhere with that. But I believe that the reasons that for a market to go down remain hanging out there. And then in the face of that, we have just seen a market that just continues to march higher, as Jane pointed out, and also you, Jim, pointed out, the smart money, the larger money coming in as buyers again and again and again. You have to kind of stop and discuss with yourself, well, what am I doing? When I back off and I just decide to be a day trader, I can take a look at it and just go with them, leaving my ego at the door and not thinking that I think it's ridiculous to be paying this kind of money, blah, blah, blah. It makes no difference because they're going to do it anyway. So leaving my own opinion aside allows me to come in and step and to trade. So my personal goal would be to increase my daily limit for profit. I think as a day trader, we set limits for ourselves, both daily, max loss, max gain. And doing that actually protects your profits or limits your losses so that you can consistently make money. So you just have to learn to manage risk. And I think just as part of an answer is having good risk management, regardless of what you think is going to happen in the second half of 2018, you still have to have good risk management in place, because you may put a position on that is not correct. And instead of limiting your loss, you're letting it run in the wrong direction. Anybody have anything they want to add to that?
Well, on a short-term basis, one thing I did want to say is that the VIX is in the 12 area. And some people who I consider to be fairly sharp made a pretty good case that 15 is kind of a mean, you know what I mean?
Yeah.
So when we get to 18 or 20, it's going to come back towards the mean. And when you get down to 12, 11, or 10, it's going to come back to the mean. So I think Jane was suggesting that we could see some kind of a drop by the end of the week. And one thing that might support her case would be that we're at 12 or so on the VIX. And if it's going to migrate back towards the mean of 15, that generally would mean that we're going to get a drop. So that's just another thing that I thought I'd throw out there, because like in any soup, you have a lot of ingredients before you come up with the spoon to taste it, right? And so one of the ingredients would be, where's the VIX trading versus where's the mean? And if you're at 2,800 and for whatever reason they can't get much through it, and something sobers up the market from all the buying that's been going on, then that VIX might go from 12 back to 15, which in my opinion would probably correlate to a correction.
Great. Very good information. Thank you very much. We still have quite a bit of time left, so I'm going to go to the survey, which has question 5. And basically that is additional comments or questions or suggestions. And one I think that would be good for Jim, and I'd like to ask Jim, is what sectors do you believe are going to gain in the second half? And what resources do you use to trade or invest more profitably? And then the second part of that question, I will toss over to Jane. And it's like, which or what option strategies do you use most often and why?
Well, let's unbundle that, as they say, huh?
Yeah, I know, right?
Okay, so sectors that look like they could have some legs. Well, you know, the transports obviously look like they're back on their bicycle, and then the small caps look like they're on their bicycle. So I wouldn't fight the tape on those two. And then you know, we got a tax cut, and everyone's got a job. So consumer discretionary obviously has done well, and you know, the Home Depots, the Tiffany's, the Williams Sonomas, Targets, you know, they're all on the bicycle. So, you know, if you're a believer that what has been going on is going to accelerate, then, you know, those would be areas that, you know, would make some sense, because people are out buying cars at GM and Ford apparently, and they are out there buying their hammers and saws with Home Depot, and they are buying their fancy stuff for their home and rings for their fingers, and that's why these things seem to be doing pretty well. And then, of course, if we're going to have all these people buying things, transporting them back and forth all over the place, you know, would come into the transportation average. And then, you know, like I say, it seems to be an across the board. Now, like the small caps are supposed to benefit from the tax cuts more than the large caps. And so that's why we're getting activity going on in there. And then finally, will the financials get off their, you know what, and get moving? Well, you know, they seem to be on the defensive still, stable, but on the defensive. But if mergers and acquisitions start to take off and leverage lending starts to take off, you would think that some of the banks and investment firms would benefit, the Citigroups, the Bank of Americas, the JP Morgans, but also maybe a dark horse would be Goldman Sachs, because it has been beat up so far. And maybe they'll get back on the bicycle if the M&A activity picks up, if this Time Warner and AT&T lawsuit breaks the right way.
Great. Thank you very much. Jane, the second part of that, actually, if you have something to...
Yeah, I have something else to add, is also the cannabis sector. You know, up here in Canada, they've just basically legalized it. And, you know, that's huge. I think there's great potential growth, not every single cannabis stock, obviously, and also everything that's tied to cryptocurrencies like AMD, NVIDIA, the chip makers, that you're going to potentially see that growth as the cryptocurrency market will grow. You know, you had a big boom in that sector in December, same thing with cannabis in December at that time too. And as the whole sectors surged, so did the stocks. And I think that those sectors are still with the upward momentum, and they will continue up. So I think those are two more sectors that to keep on watch for the second half of the year.
Okay. Because you do trade options, are there any particular options positions that you favor for a bullish move or a bearish move?
Well, I like to trade them as hedges for positions that I have potentially, or also a credit spread. If it's something's, like if for sure the SPY is going up, why not do a credit spread and just take the premium right off?
Right.
And also just general calls and puts as well, just the straight calls and puts.
Okay. And so are you basically hedging against futures that you're buying, or equity, particular stocks that you're buying as well, or selling?
I would say just with stock positions, yes.
Okay. Because I think that that's very important for a lot of people to understand, that hedging and then managing your position as it works its way towards an expiration cycle is extremely important. And I think that's where a lot of people end up not having the correct knowledge or not having the correct input to make those types of decisions. And then therefore they lock in losses instead of preventing them.
Jane, can I ask Jane a quick question?
Go for it.
Yeah, there's a company that I had some interest in called Leaf, L-E-A-F, and it's a pretty larger cap one, and on a longer term basis. I mean, do you have any opinion that might be one of the main players if you were going to put something on and throw it away for a while and see if in a long term it would work? Yeah.
That is Leaf is new to me. That's the first time that I've heard of it. For me, it's more Aurora, Organigram,
Canopy.
Yeah, exactly. Those are the big players. And
that's the ones that everyone talks about. I was wondering why they don't talk about this LEAF, because it is not certainly not been a dog. It's gone up. The 52-week low is 7, and the 52-week high is about 31. So it's certainly not a slow horse. And it's a $2.8 billion market cap. So we're not talking about Johnny Lunchbucket here.
For sure. No, definitely. One that I've actually, I find that's a little sleeper, that it's really a sub penny stock in the US is hemp, trading at about almost 3 cents right now. And they have the biggest hemp production facility within the US. They just got approval. The cannabis seed just got approved in the US, and they've made big strides of also working with veterans in Arizona. And it's a big, they're big with the hemp material production, which I think could go a long way in the future for fuels as well as materials to be used.
And that one's called again?
Hemp.
Okay, great. Yeah, I'm sure if you wanted to get in the space, you could obviously diversify with larger cap like Leaf and some of the smaller flyers, and then basically have a mixed portfolio.
Yeah, and GWPH is also another good one. I mean, that one's not, it's not inexpensive, but that's one that is already a big player in the US market with, pharmaceuticals, and using the what is it? It's not THC, but it's the CPD oil that people use for seizures. We have a good friend of ours whose son has sometimes 10 seizures a night, and has just been approved to try the oil, which can be life-changing, for these people that suffer. And that's also hemp. Also, they work on extracting that CPD oil to sell to the pharmaceutical companies.
Right.
And the baby boomers that are going to get sick, maybe they're not so unusual to use weed, right?
Yeah, for sure. Well, back in the 70s too, it comes full circle.
I was going to say, it's not a strange, shall we say, remedy to them, and you know what I mean. So it might have a pretty big market there too. Now
it'll just be legalized. It won't be in brownies.
That's right. That's right.
I actually agree with what you're saying, Jane, about CBD. CBD is actually also a great product that's being used for pain control. and pain management. And also, like you said, for seizures. And there are a lot of people that want to turn to cannabis for pain management, but they don't want to have that feeling of being high. So CBD has been extracted, and there's still a small amount of THC, I'm told, within it. So they can't eliminate totally the possibility that you may feel a reaction to the CBD. But I have heard from many people that are suffering with cancer, and so that's the pain from cancer, arthritis, all the different ailments that we tend to get as we age. They're turning to CBD. So my question back to you, Jane, is the company that you were mentioning, or was it just that a product, or is there a particular company that you know that does extract CBD and process that?
Yeah, that's what I was saying. It's hemp, the ticker hemp.
Oh, okay.
Yeah. That it's actually just gone above 3 cents today. And this one they've been around for a long time, but they're slowly taking ground, and they're teaching people how to farm the hemp and how to process it, and trying to teach farmers that this could be an alternative an alternative material that they could farm that could create revenue for them, instead of just necessarily being supplemented by the government and making corn and producing corn and soybeans. This is something that could turn into a future fuel or material that could be used by everybody, as well as for the pharmaceutical industry. There's so many different potential uses for hemp, and they're one of the forerunners in that, and that they also have the biggest production facility, extraction facility. They break down the materials as well, so they don't just produce one product. They take the hemp and they go they break it down into multiple different uses for different end users.
Right. I've also heard, and I've not tried, but I've seen the product, bath salts, and that have high levels of CBD and THC, and that you, of course, fill your tub with nice warm hot water, particularly for people that suffer from fibromyalgia or muscle pain, or joint pain. You then sit in a bath, and it's absorbed through the skin, and it goes directly to the pain versus sitting there making you feel like you're going to slide under the water. So I'm going to agree that and thank you, Jane, for adding that today, because I think it's a sector that's kind of caught on, but it's over here. It's not really into the radar yet. It still sits on the outside. And I think a lot of that is because people are still having a lot of trouble accepting that marijuana is legal in many states in the United States, and now, as we hear from you, within the entire country of Canada. And I think if people can wrap themselves around, it's like, not saying that it's going to be for everybody, but they maybe need to just kind of change how they want to look at this as a sector or an industry. Whether or not you may agree that this is the right thing to do, it's an industry that has taken off. It's an industry that has always been there, but now they can legally turn it into a profit center. And
Definitely.
so I agree with you in terms of we need to take a look at some of these companies that are publicly traded and maybe buy a whole bunch of hemp and just put it away. I mean, it's a small risk.
Exactly. That's what I did with my 401k. I took a nice position and I'm just sitting on it. And if you all know Anka as well, she and I have talked about it. She's in it as well.
So you guys have bought hemp and just put it into a long-term account.
Correct. And we completely separately. It was not anything together. We just mentioned it. I tweeted about it one day online. She said, I'm in it too.
That's great. Well, I've run out of questions. I'm going to turn it back over and we'll just do a closing round, unless you've got a question that somebody's tossed in.
Do you all have any other individual trade ideas for the week that you want to mention?
Go ahead, start with you, Jim.
Well, the only thing is that you might look at some of the stocks that have really gone up, up, and up, and up. And then basically you might want to look at what the options look like around them and see if the premiums versus where they're trading would be worthwhile to look at a two-sided situation. Because again, with the kind of news that we have coming this week and the do they still call it triple witching on Friday?
They do actually.
Yeah, so you got triple witching. You've got a very big rally we've had. We've got the VIX getting down towards 12. You've got a lot of you got a Fed meeting, you got a Singapore meeting, you've got a Time Warner lawsuit going. So you would think that with these things moving a little bit parabolically lately on some of these stocks, if you can price out the options and you think they're fairly inexpensive and you want to take a risk, the two-sided trade would be looking at straddles or strangles and basically looking for betting on volatility. And if you get a nice big volatile move, in the next week or so, and you've positioned accordingly, you might be able to benefit from that. You might even be able to see it go both ways, meaning you might see it go up where you could trade out of one side or down and trade out of the other side and then see it snap back. That pretty much is what last week's action was, where you got ups and downside, and there was activity on both sides of the market.
So,
and if you have a two-sided trade, obviously you can trade them independently as well.
Right. So in that, with respect to that, and a two-sided trade, would you think it'd be better to use a strangle or a straddle?
That's dependent upon a specific market and what the options are priced at. And then after you look at the specific market and what the options are priced at, what's your guess on what volatility will be? If you're looking at $1 worth of price and you think there's going to be $5 worth of volatility, it'd probably be a worthwhile bet. If you're looking at $5 worth of price and a $3 volatility, then obviously that's no sale. So, each individual person would have to look at the specific stock they're looking at, exactly where the options are priced, and then basically look at the underlying and say to yourself, what type of volatility could I anticipate? If everything breaks bullish, are we going to go up to, are we going to get a $5 move on the upside or a $4 move on the upside? Or if this thing is a buy the rumor, sell the fact, and the wheels start coming off a little bit, and people, want to, bring this thing back to life again. The positive here is that the momentum is to the upside, so your momentum looks fabulous. And if some of these things break properly, they could be there could be a breakout coming, and the beginning of a little bit of a melt up this summer. Conversely, if they break the other way, we've had these things are extended. We've got gaps underneath the market. Sometimes gaps are filled. You got a VIX down at 12 that certainly could gravitate back towards the mean of 15. And if that were to happen, obviously a downside action should happen. So if you can build a good, decent case for up or down at a certain point, and the premiums are reasonable, and you want to take a risk of limited nature, then it's worth an investigation at that point. And then, of course, you'll live and die by the volatility sword.
Yes, you will. Very well stated. Hi, Jane.
I wouldn't say anything much new, really, that we haven't already discussed. I do a weekly watch list that I post up on YouTube every week, and two longer term swings that I've noticed. Our Philip Morris potentially is a long-term holding, as well as Pizza, PZZA, which is, it's Papa John's, I believe, instead of Domino's. So those two I'm looking at, longer-term holdings and investments that you could trade.
Very nice. For me, again, because I'm a day trader, I tend to not carry any futures positions. But having said that, I do have core positions that I carry in the same direction for each one of them, based on my longer term view of the global economy, not necessarily just the US, but on a global basis. And so my core positions have been that I'm long gold and I'm short bonds. And what I tend to do within that framework is that I will hedge or I will play individual spurts in the market that drive it up or to further than where it probably should go, et cetera, et cetera. And so you need to protect the core, and you need to just kind of work what's happening outside of that. But I maintain and have maintained for quite some time the short in the bonds and long in gold. And I continue to favor gold. I think that it once in a while it shows its streak and it kind of gets moved very quickly. And then the market tends to go, well, higher stocks, you sell the gold, et cetera, et cetera. There are a lot of different ways that you can play that and that you can protect yourself, and which is basically what I do. In terms of trading futures, I like to keep that on a day-to-day basis, and simply because I think carrying a position just leaves you open for too much risk if you're not hedging it even overnight. We've seen futures markets get run down overnight, where they just sell it, and immediately as soon as the US wakes up and starts to come in and is ready to trade, it just gets run all the way back up. And I think that makes it too difficult to carry anything more than just a day position with that respect. Outside of that, I personally don't really see any sectors, because again, I'm not working and looking at the individual sectors anymore. But one thing that I continue to favor, which I don't recommend for everybody because of the nature of the beast, is crude oil. And crude oil right now has a tremendous amount of algorithmic firms that trade the options along with the future. And then, of course, you've got all the commercial users that are real and they really do need the oil. And so they come in. And that provides a lot of movement, a lot of volatility and directional volatility. And it just can be very, very profitable. But I would suggest, and I would say that it's a market that you really need to learn. You got to learn what makes it tick. Why does it go up? Why does it go down? And you have to be able to make your adjustments very, very quickly. We'll just do one more round, so that once again, please just introduce yourself, where you're from, and how people can get a hold of you. And
I was going to ask. I was going to ask Jane just a quick question.
Of course.
On that Domino's, not Domino's, the Papa John. It looks like the valuation on a PE basis is like half of what Domino's is, and obviously Domino's has gone through the roof. And Papa John had some bad publicity, I guess, during football season. But is there anything else that you're seeing on that Papa John thing that is interesting?
Yeah,
Other
no,
than
I mean,
the fact that it's a low price.
yeah, looking at it, technically, I mean, it had earnings and then the dividends, and it dropped down, and it's been holding a somewhat of an upward trend line now. And so I think it is like Domino's, they're the two front runners in the pizza sector. And it's really, when we see that the market has bad press, many times I see there's an overreaction, overselling capitalization on that, and people short it to, till it drops and bounces a little. And then, it seems like it's in a consolidation period. So that's why I think it could be a good potential long-term holding here, as long as it holds the little upward trend that I'm seeing going on. Obviously I would keep, say, roughly a 50 stop for an exit mentally. For longer term, but it's got some great upward potential to it, in my opinion.
Yeah, I found it kind of interesting when I just punched up the P ratio 40 on Domino's and 20 on Papa John, and then basically the Domino's being such a big advance versus a discounted down on the Papa John. Unless if they're not closing stores or anything, you would think that there could be some possibility for some great value down there. And like you say, the difference between the current price and the get out point doesn't seem to be too far. You know what I mean?
Yeah, the risk to potential reward is there, and that's it. That's why I think it could be a great longer term holding.
As long as you're not trying to lose weight. Yeah.
Yeah, exactly.
All right, I'm Jim Kenney, and those people who would like to get a hold of me, talk a little bit more about the options, it's optionprofessor@gmail.com. Shoot me an email. Be more than happy to talk to you.
Great. Thank you, Jim. And Jim.
I'm Jane Gallina. You can find me at cjanetrade.com. I'm also Airplane Jane, pretty much anywhere. You just Google me, you can find me there. And big thing is the Modern Trader Summit that is coming up June 23rd in Orlando, which will be in person and also streaming. I had a lot of people request that I make it live. And so you are able to sign up for it live with people talking about options, futures, a little bit of CFDs, and talking about the SPY as well. So we're trying to encompass all sorts of areas for people to really be empowered and learn about it and, maybe improve on what they already know.
Thank you very much. And again, I'm Michael Filighera. I'm with logicalsignals.com. And you can get a hold of me by emailing at michael@logicalsignals.com or michael@mjf1partners.com. And that about wraps it up for today. I'm going to turn it back over to David.
All right. Thanks, everyone. For those of you watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, you can now subscribe to all of the Timing Research shows in podcast format on iTunes, Stitcher, Podbean, and wherever else you listen to podcasts. Also, you can go to TimingResearch.com to get archives on any of the past shows and any of the past reports. And I have the links directly on there now to the different podcast platform pages. So if you want to see how to get to those. Also, be sure to join us tomorrow, June 12th, 4:30 p.m. Eastern Time for Analyze Your Trade, episode number 38. And you can always go to TimingResearch.com/live to access the live shows. Christian Fromhertz, Mike Pisani, and Matt Buckley will be on for that one. And I just want to thank my guests again for this show. Jim Kenney of optionprofessor.com, Jane Gallina of cjanetrade.com and the Modern Trader Summit, and Michael Filighera of logicalsignals.com. So thanks, everyone.
You're welcome. Thank you.
Thank you,
Thank you, David.